Good afternoon, this is Rich Nelson with Allendale for the wrap-up comments. Today is March 6th of 2012. Of course, a very exciting day. You can certainly argue that outside markets were the prime mover of grains here today, with the U.S. dollar trading up a large 49 here. So it looks like we have a few days of higher U.S. dollar trading. Some people will wonder, is this the start of a new trend or not? And if it is, of course, that could exert some bearish influence on grains if this U.S. dollar rally continues. As far as reasons, of course, still looking at Greece, the fact that they have a Thursday deadline to get a majority of those that debt holders group to agree to write down their debt and do that debt swap that's planned. Also, the trade's a little concerned about China, of course, with their yesterday's announcement of a lower targeted GDP rate from 8% down to 7.5% here. As far as news otherwise for outside markets, also the trade's looking at the fact that Iran has agreed to let some inspectors back in the country. That may cool some of these tensions regarding crude oil. So not only do we have this whole idea of a higher U.S. dollar here today impacting commodities as a whole, but also crude is down $2 right now, and that will also help with bearish influence on grains as well. As far as corn, down 8 3/4 today. Wheat down 15. So most of the grains did have a negative influence here for us today. One thing we will point out, of course, is soybeans finishing up 10.5. These are last trades, not settlements. So obviously the beans did much better. The trade's still concerned about this whole Brazilian weather issue here. Over the next week or so, they do not have any significant rains planned, while their neighbors just right next door, Argentina, are getting continuous great rains here. So as far as the southern Brazil crop, the trade's still very concerned about the progress there, and as it moves into finishing with pod fill and moves over into harvesting stage, we'll have to get some more harvest results in the coming weeks to actually verify these concerns. But for right now, the trade is still trading this Brazilian weather issue as being a bullish factor here. Also, we do have rumors today of potential soybean purchases from China. We've heard talk anywhere from 2 to 4 cargoes, and some people say it'll be mostly new crop. Some people say it might have maybe a mix of old crop in there as well. So we'll have to look at that maybe tomorrow morning when USDA gives those announcements usually, and see if that actually is in the mix. As far as other news to speak of, Reuters Newswire indicated, or they gave out their average guess of analysts for Friday's supply-demand report. Corn ending stocks seen dropping from 801 to 785 million bushels. That actually is probably not as much as many people were looking at. So you can argue that might actually be a little bearish when you consider the size of the rally we've had compared to the small drop in ending stocks. As far as soybeans, the trade guess says we'll drop from 275 million bushels in February, maybe down to 260. Again, the exact same story here. That's not much of a decrease in ending stocks compared to the size of the rally that we just had. For wheat, 845 was last month's ending stock number. That could drop to 836 million bushels according to the average guess. Again, not much of a drop there to speak of. So we've got this supply-demand report on Friday, and also the monthly employment report will be closely watched, even on the grain side as well. For the real action, though, as far as the markets today, obviously the livestock were the real movers here. We've got cattle down $2.32 on the April contract. Big news for today is of course, cash cattle did trade at $127. That was down $3 from last week's record $130 price. So lower cash cattle, lower futures. The trade is panicking. A lot of people saying we finally got this top end for the spring. A lot of things kind of lining up here for us right now. What's kind of interesting to see, though, is wholesale beef actually was down 23 cents for choice, but actually up 99 cents here for select. So we've got a lot of people panicking. A lot of this whole long liquidation, and that will continue probably for another day or so. But we wonder if this market won't break maybe a little too quickly, a little too far, maybe in a couple days, maybe actually turn into more of a buying opportunity here. On the hogs, down 265 for the April contract. It is interesting to see how aggressive this market is trying to hurt these hogs, even without that much of a problem here as far as cash hog prices or cash pork prices. Cash pork has been trading mixed here in recent days. Cash hogs were down in the previous 2 days, but today we actually see the Iowa-Minnesota run for the morning report actually up 73 cents here. So as far as this whole issue on the hog issue, same thing with the cattle. Maybe if this market breaks just a little more next day or two, we'll start to look at this, take a look at this from a long side as more of a buying a discounted product viewpoint here. So let's see what this market does here next couple of days. Potential trades there on livestock. Also, we've got these two important reports here for us in the grains that we will be watching: the supply demand report on Friday, as well as the employment report on Friday as well. So a lot of things going on here. If you have any questions about markets, marketing in general, feel free to give us a call here at Allendale, 1-800-262-7538, or check us out on the web, allendale-inc.com. And for you producers who have not yet signed up for our acreage survey, fill that out online and certainly help us out, and you get the chance to see the numbers from our results full 2 weeks before USDA. This is Rich Nelson. Have a good trading day and a good trading week.